Peacock joins us from IG Markets in Melbourne now. IG, Cameron, good to see you there. Yeah, which way do you think it's going to go? What's the IG opening call for the Oz market?
Yeah, good morning, Bridie. Look, we are looking at a softer start for our market today. About 10-15 minutes ago, we had been calling the market down about 12 points, or about 1/4% around that 44.74 level. Futures have just reopened a little bit higher, but still down about 6 points. But I think the slight bounce probably a little bit attributable to those strong Chinese trade surplus numbers, which we did see over the weekend. But you know, we're calling the market weaker today on the back of those weak leads we had from European and US markets on Friday. Really nothing new. We're really talking about the same thematics which dominated last week. In European markets, we had the FTSE, the DAX and the CAC all down between sort of 0.6 and 0.7% on the same sort of issues. You know, when are Greece going to get their next bailout tranche? Is Spain going to request a bailout from the EU? All those sorts of issues continue to play out and weigh on the market, and we have seen European markets really choppy all of the, well, pretty much the last 2 weeks, up, down on any given day. US markets again started a little bit higher, finished flat to slightly weaker. We had the Dow Jones up about 2 points. We had the S&P down 0.3%, the Nasdaq down 0.2%. It was a slightly disappointing session, I think, in the US, given that we did have consumer sentiment coming in at its highest levels in almost 5 years. I think it recorded a reading of about 83.1, ahead of the 78.1 that the market had expected. And we also had some big banking names like JP Morgan and Wells Fargo coming in slightly ahead of consensus estimates with their earnings announcements. So, but I think a lot of uncertainty really weighing on the market at the moment. The presidential elections are only sort of 3.5 weeks away now. That looks like being a real cliffhanger. And then you've got the fiscal cliff itself looming at the end of the year, and that's causing a lot of people to want to sit out of this market at the moment. But you know, those Chinese trade balance numbers are better than expected. The surplus came in at 27.2 billion, ahead of the 20-odd billion that had been expected, and that was due to a slightly better than expected read on the export front, which is good news. Export growth came in at about 9.9%, surpassing the 5.5% that the market had expected. So I think that's probably part of the reason why we have seen a slight bounce in our own futures early this morning. But when you look across the leads for our market today, we had iron ore prices down about $1 on Friday, currently trading at around 114 a tonne, but you know, really have consolidated above that $100 level. We had base metals a little bit weaker. We've got BHP's ADR suggesting the local stock will open down about 15 cents or 0.4%. But you never know how the market's going to respond in an hour's time. Those Chinese trade balance numbers might just be a little bit of a catalyst for the materials names. So at this stage, looking slightly weaker, but it's an each way bet, I would think.
All right, Cam, thank you so much for that. Let's just focus a bit more on that.